Properties in your country don't make any investment sense and you're thinking about investing overseas. You've heard about $1 Akiyas in Japan and successful property investors in US and UK. What are the pros and cons of each? Let's talk about it. First and foremost, you got to be clear of your investment goal. Do you want to be super hands-on to make money as fast as possible, such as flipping houses or short-term rentals? Such investments require heavy involvement from you as the investor and will take up a lot of your time. Or do you want to be more passive like us and invest in long-term rentals where you put a tenant in, sign a 1 or 2 year lease and that's that until the lease needs to be renewed? Or is your goal simply for capital appreciation to increase your net worth in the long run and not so much for cash flow? Being clear of your investment goal will allow you to choose the right investment for you. There is not one solution that will fit everybody because everybody has different goals. In this video, I will simply share facts if you want to do property investment in Japan versus US versus the UK. Again, there is not one solution that is the best for everyone because everyone has different goals. So I will simply present some facts to consider and ultimately you make your own investment decision. Point number 1. Let's talk about property price appreciation. A market with strong property price appreciation means that there is housing demand, which generally leads to rent growth and rent demand, which is a good investment market. Let's talk about the price appreciation of the three markets, Japan, UK, and the US. Averaging data over 20 years from 2003 to 2023, both the US and UK have seen property price appreciation of about 6% per annum. Do note that these are big countries and the property price appreciation in their respective cities may vary drastically. So do your due diligence on your specific market of interest. These charts just represent the average prices across the whole country. But at least from here, we know that the country as a whole experiences property price appreciation of about 6% per annum, which is a pretty good number in my opinion. As for Japan, I could only find data over a maximum of 14 years. Condos have appreciated at about 6% per annum, which is pretty good, but for the detached houses, the growth has been more or less flat over the past 14 years. This is likely because Japanese houses are typically built to last only about 30 to 40 years due to the constantly updating seismic and safety codes due to earthquakes. So the older homes are perceived to be less up to code and perceived to be less safe, which drives up demand for newer developments instead of the old homes. So while all three countries can experience property price appreciation, in the UK and the US, you can buy houses that are 50 years old, do some refurbishment, and they can continue to appreciate in the next several decades. But in Japan, that's going to be harder to achieve that kind of generational wealth since the older homes lose their value quickly. Point number 2, rent demand. If you are like us looking for positive cash flow, rent demand is a really important factor to consider. How does rent demand vary across the three countries? The percentage of population renting in the US and UK is pretty close at about 35%. As for Japan, this percentage stands at around 21%. Although 21% looks much lower than 35% in the UK and US, 21% could still be a decent number for you depending on your investment goals. A lot of people in my home country, Singapore, are investing in Singapore properties even though Singapore only has 10% of renters, which is way less than Japan. So just because Japan has a lower percentage of renters than UK and US, that doesn't make Japan a bad place for rental income. Point number 3, let's talk about the ease of setting up a business. Most of the time, you will want to own your investment properties in a business rather than in your personal name for liability protection. For example, if somebody sues the property owner, like a tenant falls down your property and wants to sue the property owner for not installing railings or for not making the floors anti-slip, the property owner would be John Smith LLC, who only owns that property instead of John Smith, who owns his house, his car, his boat, and whatever other belongings. Owning the property under a business entity will hence provide that liability protection for you as the owner. In the US or UK, it is super easy to set up a business online, 100% remotely. You can be the sole member or you can have 2 or more members. We can all be foreigners. You do not need a US local to be part of the business entity. Similarly, you can set up business bank accounts 100% remotely from wherever you are in the world. In Japan, however, it can be much more challenging to set up a business. Most people start with what they call a startup visa, which is valid for only 1 year. During this 1 year, you need to fulfill the requirements to qualify for a business manager visa. The qualifications include having a physical office space in Japan and also investing at least 5 million yen, which is 33,000 US dollars, into the business. Exceptions may be made if you qualify for a highly skilled professional visa, but that's another story. Furthermore, without a domestic partner in Japan, it can be very challenging to set up a bank account in Japan. In summary, it is much easier for a foreigner to set up a business entity in the US or UK compared to Japan. Point number 4. Are there restrictions for foreigners to own property and land in these 3 countries? This is a quick point. No, there are no restrictions to own properties or land in all of Japan, US, and UK, unlike some countries like Thailand, where foreigners cannot own land. However, the ease to take a loan from these 3 countries is very different, which brings us to the next point. Point number 5. Ease of taking a loan as a foreigner. Unfortunately, in Japan, if you don't have permanent residency in Japan, it is very challenging as a foreigner to take a loan from a Japanese bank. Even if you have a Japanese spouse, there are still several restrictions and limitations for a foreigner to take a loan. For example, annual income and age limit. So if you want to buy a property in Japan and you want to take a loan, very likely you will have to take a loan from your home country, which will affect your local total debt service ratio. Furthermore, private loans may not have very good terms, such as a short loan term or higher interest rates. Now let's talk about foreigners taking loans in the UK. There are generally few restrictions for foreigners to take a loan in the UK, so it is definitely possible. However, most lenders do have a maximum age limit on the loan, typically 65 to 70 years old. And lastly, what about foreigners taking loans in the US? There are no restrictions for foreigners to take loans in the US and no age limit due to their Equal Credit Opportunity Act. This makes it very easy for foreigners to take loans in the US to buy properties. On top of that, US is the only country that has 30-year fixed rate mortgage. This is very useful for an investor because it eliminates one variable in your long-term equation. You can fix your rate through your whole mortgage term of 30 years. If the market rates go up, just keep your rate, don't do anything. If the market rates go down, you can always refinance to the lower rate and then lock it for 30 years. So in summary, comparing the 3 countries, I would say US has the least restrictions for foreigners to take loans to buy properties. Point number 6, language barrier. Unless you are fluent in Japanese, it is going to be quite challenging to invest in Japanese properties. Because just imagine going through a renovation scope of work in Japanese. You can use Google Translate, but we all know that Google Translate may not be too accurate, especially for very complex issues like renovation scope. Alternatively, you can also get a translator in to help. For the US and UK, the primary language is English. So if you're watching this video, I assume you understand English, then there will be no language barrier. Point number 7, currency stability. Now, no biasness here. I believe all 3 currencies are good currencies, but US is the world reserve currency. So in my personal opinion, US dollar is the most stable among the 3 currencies. And lastly, point number 8, additional fees when buying properties. Now, I'm not talking about property price because in all 3 countries, you can find affordable properties. You can find landed houses with the structure, with the land for anywhere between $100,000 to $400,000. So what I'm going to talk about is the additional fees added on when you buy a property in any of these 3 countries. In Japan, there are several additional fees slapped onto property acquisition, including acquisition tax, title registration stamp duty, consumption tax, and contract stamp duty. The cost of these fees depends on the price of the property you purchase, so ensure to factor these fees into your calculations. In UK, other than typical title and lender closing fees, there is also stamp duty which follows a tiered approach. If it is your first property in the UK and costs less than £250,000, then there is no stamp duty, but anything more than that will incur stamp duty. For the second property onward, the stamp duty of each tier increases by 3%. Meaning even if your second property costs less than £250,000, it will still incur a 3% stamp duty. What about the US? Other than typical title and lender closing fees, there is no stamp duty nor additional taxes on owning multiple properties in the US. This gives the US an edge as the more affordable option to scale your property portfolio. The slide here just summarizes the typical stamp duties in various countries for illustration and comparison. So in summary, I think all 3 countries can make good investment locations as long as you consider the limitations in and by right. This table summarizes the 8 points we talked about in this video. There could be 100 more points, but these were the most significant ones that we felt would affect most investors wanting to invest in these countries. And that's all I have for now. What do you think of investing in Japan, UK, or US? Leave your comments down below. Let's start a discussion. I would love to hear from you. If you liked this video, please help us by smashing the like and subscribe button. We would really appreciate it. You can also check out this video and this video to see some of the numbers on our properties in the US. So that's all I have. See ya in the next one.